All right, good morning, good afternoon, everyone. Today is the 26th of November, 2023, and we are getting very close to closing out the year, but also November. So, again, happy holidays to everyone. I hope you had a wonderful extended weekend. I hope that you're doing very well. As you can see, we are going to start here with our normal. Um, Broad market analysis. And during this, what I'll be doing is just going over the things that I feel have helped me for a very long time now. To be quite honest with you, without doing this, I would be lost. I need to have some sort of pulse on the market by using supply and demand and some Fibonacci's and all these really good things that I teach you here at Simpler Trading. But this broad market analysis, like I always say, is for me, and I share it with everyone else so that you can understand you don't have to get up in arms and really put too much emphasis on all the noise that's out there. There's just a couple things that really tell the story in the entire market. And I, to this day, really look forward to sharing this with you. So if you wouldn't mind, just go ahead and hit the like if you like this information that you get from me. If you have any other questions outside of this, hey John, how do you trade this? How do you look at this? How do you look at risk? How do you pick expirations on your options? Why do you trade equity sometimes over options? And what is your outlook on futures? Like, why do you only sometimes trade futures, or do you like futures over options, and so forth? I've been doing this a long time. There's a lot of information that I could share with you, and I hope you really like it. Okay, so I do see that my chat is working over here on YouTube, so that's great. I had to download a new OBS system and kind of start from scratch, so awesome. Good morning, guys. So let me make sure that you guys can see my, I feel like my age is showing here. So let's see if this is good to go. And yes, I do have the loudest keyboard ever. And it's kind of funny, it said it was quiet, but it's wrong. Let's go ahead and concentrate right here. This is this week's major U.S. Economic reports and Fed speakers. As you all know, when I start this, I always tell you that this information that I'm sharing on this screen, this is information that can create movement in the market and sometimes volatility. And the way that we look at it as supply and demand traders is I am giving you the levels before the market even opens, right? It's Sunday, it's 11:19 a.m. Central here. And the proof of concept, I always say, is not only what I'm teaching you here, but look at my charts. Right? We are going to give you the information before the market opens, and then you're able to use this methodology to execute these levels. And all this information here, all this stuff here is just catalyst that moves price into those levels. And as soon as you can take that information in and understand this, it will give you that zen that you're looking for when it's time to trade. So this week, far as Monday is concerned, that is tomorrow, new home sales. All right. And then on Tuesday, S&P, consumer confidence, Fed Governor Christopher Waller. Then we have another Fed speaker here, Goolsbee, and then we have Michelle Bowman, and then Michael Barr, and then Michael Barr. So a lot of Feds talking already coming into Tuesday, and this right away tells me, hey, we need to work on our patience this week. It's been an amazing November. We're coming into the end of November. And this right here with a lot of talking heads tells me that you better be patient. I think that if you're trying to top call this market right now coming into the end of the year, you might find yourself at a disadvantage. Matter of fact, I think that finding lower time frame demand zones is where the money is going to be sitting going into the end of the year. And I'll show you that here a little bit later on the ES futures and the Nasdaq futures. On Wednesday, the 29th, we have GDP. This is definitely a catalyst that could cause a little bit of volatility in the market. And then we have the advanced US trade balance in goods. And again, all these times here on the left-hand side, this is Eastern time, so that everybody knows that. Then we have another Fed Pres talking, and then we have the Fed Beige Book. And then coming in on Thursday, we hit you with the norm with initial jobless claims, personal income, personal spending, PCE, core PCE, and so forth. And then we have some PMI. All right. And then on Friday, Fed Governor Michael Barr speaks again, ISM manufacturing, construction spending, Fed Chair Jerome Powell. And anytime we see this name, we think, hey, there can be some volatility. So out of this entire week, looks like a bunch of noise. It makes me feel right away, you better be patient. You better know where your levels are, because if these catalysts push price into those levels, you need to be ready to execute. All right, let's go ahead and move on down into this earnings for this week. I was actually shocked because I have not been paying attention this week, because I've been with family and friends. But I love this lineup. I love what we're seeing here coming into this week. We have some great names that we can trade. So you guys know I like to do debit spreads into earnings. We'll be looking for the supply and demand on these. And if there's anything that I didn't underline that you're interested in, just make sure you bring that up in the room. All right, or if you follow me out here on X, then ask me questions around that. CrowdStrike, big name for me, so I want to make sure that I'm definitely looking into that for earnings play. And then Workday, into it if you're into that. And then Foot Locker, Dollar Tree, Snow, CRM, Okta, Five Below, Victoria's Secrets. I mean, you gotta love Victoria's Secrets, right? And then going over here into Thursday, we have Marvel, Ulta. Definitely, these are going to be on my radar, and Amba. All right, so that is our Earning Whispers coming into this week. And again, thank you, Earning Whispers, for providing this information for free out there on X. I appreciate it. I've been using your information here for many, many years. The next thing that I want to show you is last week's neutral results. So because of the neutral results, meaning not much has really taken place, but there's a couple things that you can see from here. Remember, the neutral strategy is here on my YouTube page. If you guys want to watch it, spend a few minutes to understand it. If you want to learn how to do it, I actually have videos out there to teach you how to do it as well. As soon as price breaks over 452, the idea is to, not the idea, the methodology is for you to go long, and you'd be looking for a move into 454.61. That happened, then we stalled there. We had the trendy turns at that target, letting you know, hey, you might want to back off. Price comes back down to our entry level at 452 and then right back up. And then we end up stalling for the week right around target 1. So what has happened? Not much at all. QQQ, same thing. We pushed over the neutral strategy. You can see we did hit target 1. We pulled back and we stayed in neutral. Because not much took place, all right, I am choosing going into this week to use the same exact neutral strategy. So all this means, all right, and I get it, like sometimes you're like, yeah, I need that comfy feeling that price might be in the neutral, and as it moves over, I want to be going long, and if it moves under, I want to be going short. But with price up here, how do I do this? Just remember, every level to the upside is resistance, and every level to the downside is support until proven otherwise. So let's just say that we open completely flat going into tomorrow morning. What I would tell you is 454.61 is going to be that support. So say we open up a little bit down and we open at this level, I would be looking for bids to come in, and I would expect the market to be able to bounce a little bit, at least up into this yellow line and this orange line here. Okay, over here on the QQQ, since we're in the neutral, everything just kind of plays as normal. The only thing that I would say to take note of is we've already tested target 1. All right, so let's say that we move over the neutral at 389.79 and you decide to go long. I want you to be cautious of this wick here and this wick here. As we were to approach those wicks, I would be trimming. I know it's not a lot of return, but just be careful. The topping wick in here says that on the QQQ that you might want to be cautious. Okay, and there's a couple other things that I'm going to show you that say caution as well. All right, so we're using the same exact neutral strategy levels that we used last week. All right, coming down here on the SPY bigger picture, if you want to kind of see this a little bit bigger, you can also go to X and follow me there. You'll be able to read these notes, and what I do is I use a quarterly candle. All right, and on this quarterly candle, it's important to understand that we identify that we were going inside and up. We also had a green arrow here, or a buy signal coming from the trendy indicator itself. Our notes as of last week were pretty straightforward. The SPY quarter is now now inside and up. Your targets above are the fibs within the supply zone. That's the 75, this 50, and the 25. So your target was 454.77. We ended up hitting that. Okay, support was 446 and 442. Your notes far as this week is concerned, your first fib within the zone was hit, and now that becomes your near-term support of 446 and a half. Is this week's support, is price can hold near support? I would expect 463.28. It's not until I see below 443 that I change my bullish buy the dip conviction into the end of year. So again, very important to take away from these notes here. I am bullish until I start to see prices under 443. Okay, and let's go ahead and move down. Don't worry, I'm going to show you some of this stuff on the chart so it's a little bit clearer and a little bit better and easier for us to kind of roll through. QQQ update. As of last week, target acquired, support now 374 by 362. Target to the upside is 396 and 400. Your update for this week, a new higher high was created, and you guys can see that we moved over this pivot high, so that's a great look for bulls. The blue line, which is right here, all right, the trendy edge, is near-term support going into this week. So that's 385.75, and long-term support is 362. And as long as 362 holds this year, I keep my bullish stance, buy the dip. But again, I'll show you on the futures where those little dips are and the areas that I would be looking to try and buy those dips. And I'll show you that here a little bit later. Overall, the inside and up formations are working very well. You guys can see that. And again, inside and up formations, the idea here is that these candles do not close until the end of the quarter, which is the end of the year. Okay, so we still have just over a month left, so anything can happen. I want you to please understand that. As of right now, we are anticipating that we are creating demand and that prices will lead to higher value before we pull back into these areas of demand. All right, so these inside and up formations. The next thing I'm going to show you is the DXY, or the dollar. Big support around 104 and 103. So this is from last week. And then now that is a beautiful thing for the bulls. And then your update for today, the 50 has been hit, and that's a fib level. Expect support soon unless the 618 totally fails. Now the idea is when we measure or anchor our fibs from a pivot low into a pivot high, that the 618 is your golden Fibonacci, and that should hold. All right, unless it totally fails. So what I'm saying is current price on the dollar is getting close to some sort of relief bounce or getting close to support. And when we say these things and we're close to them, it's important to note that when the dollar is moving down, in most cases, the market is moving up. We are all most likely in agreement that prices are at these highs and that it needs a little bit of digestion. So in the back of your head, you should be thinking, okay, well, if the dollar is getting close on this chart to a near-term support level and or a relief bounce, then I would expect the market to kind of pull in a little bit and at least digest, okay? So again, that's the dollar, and that 618 is around 102.62. And again, I'll show you these on the charts here in a minute. The TNX 10-year Treasury, your update price came very close to the demand zone that I gave you several weeks ago. This is the target we were looking for. Now, this is very hard to see. This candle right here, the low is right there. And then the high is here. It's pretty much a doji, if you will. And it came close enough to demand. We started to bounce here, but the note here is resistance is at 4.5 to 4.6. So the TNX, the 10-year Treasury, also showing some sort of relief bounce area. I wouldn't be concerned about the TNX unless it starts to get over this middle candle here until it starts to break above there. So really, sure, it's a relief bounce. It's close to demand, but I'm not really concerned until you start to see prices reach up and hold above 4.6 on the TNX. SKEW, This week at 144.54, it's basically at protect mode. No update, but this continues to be relevant. Okay, the SKEW continues to stay in the protect area and fluctuates to bearish and bullish in here, and I'll show you that here in a second. In my opinion, we stay within here for the entire year, and we see a more extreme level into 2024, and I'll show you those extreme levels here in a few minutes. Extreme would be at the green levels. And again, we're not quite there yet. Fear and greed index, we saw this tick up 10 points from last week's broad market analysis. So now we're sitting at 68. We were at 58. We're still in this green box. And a lot of times this year, we have fluctuated from fear to greed and not necessarily extreme fear and extreme greed. I mean, yes, a couple times this year, but we fluctuate a lot going back and forth here. And that's why here on the SKEW, why we continue to stay in this area, in this protect area. Okay. So again, we are sitting at the 68 level. It's telling you that the market's getting frothy or a bit greedy, but it's not extremely greedy. All right, now let's go ahead and go into our charts here. So I'm going to pull this up there. Let's go ahead and minimize this, and let's get over to the ES futures really fast. And I'm going to take you into the weekly. All right, and this way I can explain everything to you. First, I'm going to read you notes though. The turn signal worked. I told you guys that a couple weeks ago. That trendy turn signal was right here, this yellow line or yellow arrow, and we've gone from white to green. We have gone above the cloud, and anytime we start to do all of those things, it's a very powerful move. You can see we busted through this supply zone, and for me, the target right now, as long as we can create a base above that, we are going to continue to try and move up here towards that 4,600 level, that nice round level. And if we can create a base, and we're looking for that trendy edge around 46.58. All right, so that still gives us close to 100 points or $10 to the upside in the SPY. But what you need to be concentrating on here is not just the dollar signs. All right, it's if this then that. So notice that we pushed above the supply zone. We have a little bit of a topping wick, but it does show some strength here that we could get through supply on the week and still hold above the back end of that supply zone. So your near term support, if you will, is going to be right there at that 45.64, which really isn't that close. So the bigger number that I want you to concentrate on this week is 45.38, and that's about 30 points from where we closed, and that's about $3 to the downside on the SPY. So remember that number. I definitely would expect some buyers to come in around that level. If for some reason I'm completely wrong, then you're looking at the weekly support, if you will, and as long as we can hold this, I stay bullish at 44.90. Okay, 44.90, and all I'm doing is I'm taking this supply zone and then applying the levels to what I'm telling you. All right, at first this should have been resistance. We broke right through it, and as long as we held it, we stayed long. All right, we've done really well in November, and we just stay long, and then we shoot for the backside of the box. We did that, and then it turns in, okay guys, if we can hold above that and get through the bear house, and remember I explained that to you, once we get through the back door of the bear house, then we need to create that base, and then we start to head up towards these. Now again, it would be silly for me to sit here and ignore the fact that the divergence between price and where the cloud is it's pretty substantial. All right, there's a lot of points in there, a lot of error, if you will, and you're looking at over 200 points of error in here that we can play with. That's a really big range. All right, definitely a big range. So I'm going to show you on a smaller time frame why it's important to understand where those buy the dip zones are in this 200 point range. Let's go ahead and move over to the daily. Again, this is your daily. We've moved just a couple of the levels. All I did was take the resistance level and I moved it to your trendy edge. This is resistance until proven otherwise. And if for some reason the ES futures pulls back into the buy triggers, this is where I'd be looking to go long. But just as a reminder, we wait until price gets here, and then I go to a smaller time frame and I'm looking for the trendy turns to appear before I take that trade. All right, but this is your blueprint. And again, guys, on all these charts that I show you, if you're wanting to look at the levels and put them on your charts, this is where you would freeze the screen, take those levels, put them on your chart, and so forth. Okay. All right, so the 4-hour, this is what I keep talking about. All right, and last week I said, listen, it's all about the 4-hour chart, right? I mean, all the charts are very important, but here, all right, is that on the 4-hour, in that big 200-point range that I showed you, we have imbalances in the market where orders came in, price filled very quickly, institutions got what they needed, retail starts to kind of piggyback on the backside of those institutions or any unusual option activity and all that kind of jazz, right? Well, I need to know where those imbalances are. And each one of these green boxes, I am annotating and showing you where I believe the imbalances in the market are. Not all imbalances are created equal, okay? So when you look at these boxes, you'll notice there's some difference in here. For example, and I'll just show you really quick on this 4-hour. See this candle here? This is what I would consider a chaotic candle. This is a huge candle. This means that not all orders were filled. Matter of fact, it took off so quickly that a lot of traders, they missed that move, right? And this is where, see these little baby candles? That's you and me, right? Well, I shouldn't say that's you and me because we are identifying the bigger imbalances in the market before we get long. This is the majority of the market after the move happens. This is the type of trader who's like, hey, I'm sitting on my hands into this catalyst. I'm not going to do anything until all my signals do this, this, and that. And then finally, they start to kind of ride the curtails of institutions. Again, we want to align ourselves with the bigger moves in the market, and this is why I identify these levels. This candle here is different than my green box here. Notice that this candle has a lot of strength behind it. So if we were looking at demand zones, all right, or in this case imbalances as well, which one do you think is stronger? All right, so this green box could work, right? Price could come in here and, bears just do not get the dip they want. And, you do something like this, all right? Or we get what we call a relief bounce where price drops into this zone, okay? And then we don't get relief bounces do not make new highs. They typically run up about 23 to 38%, and then they roll over. And if you look at this, this would kind of give you that head and shoulders, right? Head, shoulders, and then we break down to the bigger imbalances in the market. I personally would rather put more money behind a trade like this than I would right here. But again, I can't tell the future. I'm just showing you where the levels are. You gotta find your allocation where you're comfortable and take these trades according to your risk tolerance, all right? And again, we have a lot of imbalances underneath us, and that's great, all right? But please understand, for any reason, let's say a catastrophic catalyst comes in. I don't know what that would be. All right. There are times in the market, I need you to understand that I've seen candles like this, and I'm sure you have too, that can destroy all imbalances, okay, and flush everybody out and then not find some love until the last imbalance down here. All right, so these are no guarantees. These are just areas that we find, and most of the time they work more than they don't. But when they don't, you need to have a plan. So always understand your allocation, okay? All right, so those are the levels that I have there on the ES futures. And this is my overall sentiment on the ES futures. A tad more caution, but more from a patience standpoint. Many traders expect a pullback, but earnings this week has some great names in it. And since the masses want a pullback, it most likely will be a slow process and one that may not happen like they want. If I were in charge of the market, and I've been saying this for many years, I would go sideways and digest this move and wear those traders out who think that we're going to get a big pullback. Matter of fact, the sentiment has been like that for about a week and a half, that everybody's looking for this pullback, but it's not happening. So when we go to the 4-hour, what I want you to remember is not only where these levels are, but at a minimum, if price cannot start to close below this 4-hour cloud, just like I said last week, then your tune should be, hey, the trend is still intact. That's what this EMA cloud is all about, to keep you on the right side of the trade. Okay? And then if we start to break down below the cloud, are we in pockets of demand? And if we are, I'll be looking to buy the dip. So either way, let's continue to value the price, all right, and not value other people's opinions. And I mean that. And there's a lot of people that I see, I don't necessarily listen to. I try to only listen to myself. It's impossible at times, though, so just know that. It's easy to let noise into your mind. And once it gets there, it can be toxic to your trading. So again, my point is price is king. Let's go into the Nasdaq futures. And we'll start with the weekly, and I'll kind of talk through this as well. All right, so this is the weekly, and if we kind of do this, you'll see the entire chart looks like this. And what's beautiful is our blueprint has been working for a very long time this year, okay? Now, the weekly, all right, very important. Price has managed to stay above the supply zone. That's that little red box right here, okay? And it even back tested the zone or slash the trendy edge, these edges right here, longer time frame edges, okay? And they made a new high. We made a new pivot high last week. That's a bullish sign, okay? Our near term support, okay, is going to be 15,870. All right, so all I'm doing is using a level that I already have on my chart, and that's also the trendy edge. So 15,870. Long-term support is 15,320. I'm using the entry into that supply zone, and it is also confluent with the 9 EMA, which is right here. And let me kind of open that up for you so that you can see a little bit closer. Just like that. Notice how now the 9 EMA is confluent inside this zone. What was resistance could now become support if we even were to have a pullback. So this is important from a weekly standpoint. We're above the cloud, and that cloud is support. Okay, that cloud is support until proven otherwise. Let's go ahead and move on into the daily. Once again, we are using resistance this week, using the trendy edge. We're using two different edges here. We have a topping wick. We have a flag building out here if you're into that type of thing. And your trigger long is at 15,872. We also have formations formed here. One thing that's important, we were just talking about zones. If I were to wrap a box around this, it would look like this. And then right here, I would wrap a box around that. That's why you have two trigger longs in this area. These trigger longs are based on zones. So you do not see a box on these dailies, but these are zones in this area. That's where I get these levels from. Now, again, are all zones created equal? No, they're not. Look at the difference of the move out and the move out here. All right, the move out here almost feels exhausted, right? Topping wick, right? Lower high, sideways. This is what we call imbalance in the market. These are the better areas, in my opinion, to try and get long. All right, so again, I don't know though. It could be possible that my notes that I were just reading to you, that everybody's looking for that deeper pullback, but maybe you don't get it yet. Maybe what they do is they wear you out before the market actually gives you a substantial pullback, if you will. All right, so again, would this be a big pullback if we only came back right in here to the 9 EMA? Not really, 200, 300 points, and then, this is where you start to hear all the negative sentiment again, and that the last several weeks made no sense, and that the economy is terrible and nobody's shopping, and oh man, it just goes on and on and on. And if you're a human like me and you get outside of your house and you go and you see things like other people, malls, shopping, retail stores, I don't know about you, but I could tell you I went out. I have a list that I had to, put together, and, I have kids and I have grandkids, and there were a lot of people shopping. Matter of fact, it looked like it did 5 years ago and 10 years ago and 15 years ago. people are buying things. Remember, news is a catalyst that pushes price into supply and demand. And at the end of the day, all news is old news, in my opinion. Again, look at it as a catalyst. It's okay if it's bad, just know where you want to buy. Let's move on. Same thing, Nasdaq, here we go. We're using our trendy edges to the upside as resistance, so around 16,142. I'd expect resistance there. This is a 4-hour candle, and unlike the ES, this one's a little bit deeper inside the cloud. Remember, the Nasdaq has pretty much been leading the market to the upside, to the downside, whatever it may be. They kind of are the canary in the coal mine, if you ask me. So, if they start to break below the EMA cloud, say before the ES and so forth, what I look for is synergy. So I'm looking for, your major players like the YM, the RTY, the ES, and the NASDAQ, basically all to reach demand zones before I start pulling that trigger to the upside as well. Okay, so if one's leading the other, we look for synergy, and again, I'll show you that in the room, obviously. Okay, so these are your levels to the downside. Again, not all levels are created equal or imbalances in the market. We got some really nice ones. Like I like this one down here. I really like this one, and everything in here could be just a relief bounce. And again, relief bounces, if you want to put them to the test, all I'm saying, this is a little lesson for you guys. Let's say that it moves down to here and we start to bounce. All I want you to do is anchor your Fibonacci from here, and then when it starts bouncing, find that 23 and that 38.2. All right, and if they get, let's just say this is the 38.2, you'll get that relief bounce coming up like this, and if it can't get through that, I expect it to come right back down. You'll get that little head and shoulders look, and then we'll come down to the bigger imbalances in the market. Okay, this is where I like to sell credit spreads when we bounce up towards that 38.2. That way, if I'm wrong, we'll just buy back the short side and stay on the long side. Okay, but it's almost like the same thing over and over and over. Okay, all right, so that was the ES futures. I'm gonna take you into TradingView here in a second and go over some of those other charts with you. But I want to make sure that everyone understands, who's not a part of Simpler Trading in the Trendy Room, that these are like bigger charts that we look at, that I trade off of when I do trade the futures. But every single day we have an intraday strategy that we use. Okay, and it's the same thing. All right, I'm going to give you two targets. I'm going to use smaller time frames. I'm going to find supply and demand on the charts. Usually I'm working with a 2 to 4 hour on Monday and building myself down. And then as we get closer to the end of the week, I start using smaller time frames, right? Because a lot of times what we're doing is we're just using up supply and demand based on those smaller time frames as we get closer to the week, the weekend, if you will. So we come in the mornings. All right, I give these out way in advance. I feel like at least an hour, hour and a half. And then your charts, we're going to have the PMZ. All right, and you guys can see here the PMZ on Friday. And the concept here is for us to trade long above it and short below it. We opened up on Friday. I believe we were underneath it. We came up. We said it would be resistance until proven otherwise. It broke down. It hit our target. Okay, right there. All right, and then it started to move up. So it was a brilliant, I mean, I say this with no ego intended, I promise. I've been doing this a long time. The only thing that really gets me pumped up is when my members are doing well. All right, we're going to call a lot of levels, things are going to work, but what I care about mostly is you. Whether or not you are getting in the right mindset to be able to trade, and am I helping you to make you a better trader? That's all I care about. All right. At the end of the day, I'm telling you, money, all those things, you guys know I have residual income coming in. I'm very happy. But it's all about my family, and you guys are a part of my extension of that family. I just want to see that you're doing better. And if there's something that you're hung up on, I hope that you guys can use the room and the chat, and you can ask questions, and feel free to ask those questions. What I will tell you before moving on here is, please, I get some people like to use email, but I prefer if you just reach out in the room. You can just say, hey John, I have a question for you, and then from there I can DM you or something like that, and try to give you a little bit more insight. And we have a lot of good traders in the room who are able to also help you. Okay, so let's go into TradingView. All right, we're going to pull this up right there, and let's start again with SPY. All right, so earlier I gave you a look at the quarterly, and I've been putting these notes in here forever. All right, but I want to show you why this stuff is so important. All right, that you understand the bigger picture, because I've been doing this for many years, and it's always the same thing. It really isn't any different. Traders get spooked in demand and they get euphoric in supply. That's how the market works. You have to understand this, that they're not going to give you amazing news at a demand level. All right. They're not going to say 4 weeks ago, when we were sitting at the summit in Orlando at the money show, people aren't like, man, you got to buy this with conviction, right? Matter of fact, the masses are like scared. And they're telling you, hey, I'm expecting things to go down. And ever since then, the market's moved like 400 points, man. $40+ in the SPY, right? People are not, that's what I always say. How many indicators are telling you to buy when the market is dipping? It's like zero. Like, I don't know of any indicators, and that's why I love supply and demand. You're able to put this in control. You control this. You find the formations, you find the demand zones, and you execute off of them with your risk tolerance. You don't need an indicator to tell you to do that. All right? You just got to put a little bit of time into it. Now, I did create, trendy edges that identify playing fields of supply and demand on multiple time frames. But I really encourage you to do it the old-fashioned way, to learn how to find them. It's not hard. Put some boxes on your screen. And then when you start to get to the point where you're having a lot of fun, you're like, well, time is important to me. That's when you start using the indicators. Indicators are convenient, especially the trendy edges. Like, I don't need to go back and find all these. These are going to help you find those formations, okay, on multiple time frames. All right, so again, no indicators out there that I'm aware of. All right, because 4 weeks ago, the only thing I could rely on was my boxes, okay, and our turn signals. But the masses, they were running for the hills. All right, they were running for the hills. So that tells you something right there. And you go back, and almost every time the market's pulled back, the masses are telling you to stay short, as if the market's going to zero. Okay? So you have to understand how to find those formations. Okay? For example, I could tell you this is a formation here. Price came into that demand, and then it picked up, and as it got above the cloud, the rest was over. Okay? Now here, I'm fast forwarding into right now, and we have formations forming on a quarterly. All right, and you could see right here that we had formation right there, supply. Price went into a smaller time frame demand zone right here, and I would just drop this 3 month and go into a monthly and then a weekly and find you that zone in here, and then you would ride this into this inside and down formation. Notice that price stalled there. Again, we coach this on a weekly basis, and I'm very confident that I've been showing these things for many years, and you guys see the proof of concept. But what do you do now? See, we are anticipating, as I was saying before, that we are creating an inside and up. And a beautiful thing that TradingView does for you is that they tell you right here how long that candle has until it finishes. So we have 1 month and 4 days until we know if this is going to be an inside and up, or perhaps maybe an inside and down. That would be pretty wild. Or if it's just going to be another inside candle. So you could end the year with 2 inside candles, and January would be up in the air whether we go up or down. Okay? This anticipation of an inside and up formation is beautiful. It's something that I taught many, many years ago, and you can see the value of it when you go back and you back test it, or maybe perhaps you actually traded it. Okay, for example, this is an inside and up formation. There's actually two of them here, and you can see the result. The anticipation is that we're moving up until we don't anymore. Okay, so that's exactly what we're doing here. And far as this chart is concerned on the SPY, all I'm doing is giving you levels that are right on my chart. So notice we closed just above, I believe, that target that I gave you 2 weeks ago for 455.30. And all I'm saying to you is, as long as we can hold that level, look for a move up towards this pivot high or this 463. And the longer term support, all I'm doing is giving you this 446 level here and saying, hey, don't get too concerned just because we get a pullback. The bigger picture remains the same. We're staying above the cloud. We're inside and up. Just ride the wave. It's not until prices start to break below this, okay, that I start getting concerned. Because again, if you were to take the formation, which is right here, if this candle were to break below and here, now it's a double inside. So it looks something like this, okay? It'd be a double inside and that green candle wouldn't be there. That's when my sentiment changes. I'm like, okay, wait a minute. Things are going in a different direction. And what that means is that on the ES futures and even on SPY, those smaller time frame demand zones, that means they broke, right? They're broken. They didn't work. So the demand wasn't quite there like we wanted it to be. All right. So it's not that I am waiting until then to take action. There's other steps we take on the smaller time frames that get us leaning towards the short side, but they have to break down before I'm convinced that the bigger picture is not a buy the dip scenario. And I've kept this bullish stance the entire year, and far as I'm concerned, we have read the market like nobody else out there. Let's go ahead and move on and look at the QQQ. All right, so this is the same exact thing. If you go back since the inception of the market, you will find that inside and up and down and supply and demand formations are where the market's at. What you have to take from here is you have to understand how these agencies work in order to push price into what I consider bigger pockets and smarter money. And that is no slight against anyone that's trading. I believe it takes a long time to start thinking like an institution. It doesn't mean that you're dumb or that you're trading with dumb money. What it means is you're not thinking like an institution. Let's push out negative news around a big company. A company that's not going anywhere. Apple, right? China supply issues. Price comes down, retail drops, they get, the tree is shaken, they're finished, and price, right when they tend to get stopped out, comes into a level of demand, and then boom, Apple goes right back up. This is the story over and over and over. It's us against them, okay? In this scenario, if you come into here's a great example right here, back in 2020. This is an inside and up formation. We are anticipating the long. We break above and look at the results here, just looking at the QQQs. If you were with me, not here, but back here, and we were saying the same exact thing, look at your results, okay? Now, the fact that most of you would not be able to hold this long, right? That's probably true, even myself. It's not easy. I'm not saying that trading is easy. It's actually very difficult. There's a lot of demons inside of trading. But these formations and anticipation and understanding sentiment and how retail and institutions are completely different in how they think, I want to be on the side of the institution, and that's what I'm trying to help you, to think like an institution, or at least how I think they think, right? And how do we line ourselves up with the bigger money? And I'm telling you right now, it's not with how this person thinks or this person thinks, because these people, they're not sharing with you how they think. They're not on Twitter, right? They're not on X. They're not giving you the secrets that you're looking for. All right? That wouldn't make any sense. So how you learn is you study, study, study. That's what I did with these charts, and I'm hoping that I can help you guys out. Okay? So again, inside and up is what we're looking at. We have an inside and down. So now that the Qs are in this space, you do have to kind of step around on eggshells, okay? In this scenario, we are in a quarterly supply zone. And if you recall, if you don't recall, that's okay too. This is what we call the bear house. You can put a roof on it if you want, just like that. This is the door, the 362 level right here. They let us in the door, but at any time they can kick you out of the home. The goal for bulls is to push through this supply zone, get through the back door, which is this line back here, which was the previous high. And if we can create a base behind there, things start to look really good for all-time highs. All right. Now, what do you do while you're in the house? Well, you step with tact, right? You understand that they can kick you out at any time. So you have to take this information and you have to start to break it down on smaller time frames. See, there's a picture, there's a story on every time frame. And a good trader is able to take these time frames and move through them very quickly and start to take that information and go, okay, I understand where I am big picture, but if this starts happening on this time frame, I'm going to do this, X, Y, and Z. And if it happens on this time frame, then I'm jumping out of my positions. Or, you're going to create a plan around this. That's what's happening right now. I understand the bigger picture. That's what's going on. And as long as this candle can stay above this base or this body, the top of that body, we continue to move up. It's not until we start to break down below those levels that I start to change my stance on the Nasdaq QQQ, the ES, SPY, SPX, okay? That's my concentration. And for me, this has really helped me to understand and see when we look at all these things and we look at the big picture and then we think about all the other things I showed you, meaning the fear and greed, the dollar, the TNX, and we start to push that together, what is it telling you? I said the dollar is looking like it could be coming into a relief bounce area unless the 618 breaks. I told you the TNX could still push up towards those two levels, but I told you it's really not a big deal unless we start to break above those levels. All right. But everything's showing me that right now you need to tighten up just a tad. But the biggest thing, do not try to call this market on the top. That is so lame. That is for people who are more interested in their ego and they want to be right. Who cares? We're going to forget about you anyways in 2 days from now. All right? Even if you call the top of the market. I don't care. I want to know, are you creating and teaching a process that other people can do? Every single day. Can you wake up in the morning and can you look at the market and read it? Not, hey, the market's been going up 4 or 5 weeks. I'm going to wake up every other day and call the top. It's not working. Do not call the top of the market. Have a plan. Know where those levels are to the downside. If those are not working, fine. If a level breaks and we hold below there, then things could change. I give you those levels today. It's if this, then that. If price can hold this, I'm looking for that. And if price breaks below this, then I'm looking for that. But the entire market is trying to call a top, in my opinion. I'm seeing it everywhere. And the biggest thing for me, just let price action guide you. Have a plan, know where your stops are, and be zen-like. That's what it's all about. All right. So anyways, guys, that is your QQQ. And then far as the dollar and the TNX go, DXY. All right. If we come over here, we do it on a weekly standpoint. That's what it looks like. From here, I showed you the supply zone. I told you what could happen. It did happen. And then I coached you all the way to the downside. And the dollar, again, is around an area where we could find a relief bounce. All right. and that is the DXY, and this is the TNX on the charts. This was the demand zone, and like I said, it's really hard to see. That candle is really faint, but it came down really close to our demand level, started to bounce. And as I said, if the TNX can't get above 4.6, 4.6 and a half, I really wouldn't be concerned. But just know as it's bouncing in here, you could see a little slight pullback in the market. Now, let me end here on the SKEW. I keep talking about this, and I need traders to understand how I'm looking at it. Your extreme levels, matter of fact, this year when the market went up 200 points in one day on the ES futures, we actually, said, hey, right here, expect a big move to the upside. And I remember I was saying about 200 points. I didn't think it would happen in one day. It did. This is your extreme level. Basically, what's happening in the background, if you were to put a SPY or a QQQ chart back here, when the SKEW is down here, all right, the market, let's say this is SPY, is moving down. This is what we call extreme fear. Max participants are on the put side. All the news agencies and everybody's, they're putting out a bunch of negative news. And like I said, no one's telling you to buy down here, right? Everybody's scared. And then when prices on the SPY, QQQ are moving up, then the SKEW is in this protect risk off area. Now, notice I have two red lines. It used to be that I'd only have one red line and one green, but I've created like a zone, if you will. And earlier I showed you guys that moving from the fear and greed on the indicator has really been fluctuating between fear and greed and not necessarily extreme levels. And really, we're just staying in here the whole entire time, which is, in my opinion, it makes for a little bit harder market. I like the extreme levels. That way, let's say we come into an extreme level into 2024, maybe into elections, everyone's getting scared. This is where I want to put my money, right when we get down here. And I want to give it about 3 to 4 months to work out. All right, it could happen the next day, but this is where I want to be looking at pressing the gas pedal. Up here is a little bit more trickier, and it has been trickier for a lot of folks. It's telling you to protect and risk off, and it's been in here for many, many months. All right, so just something I want to show you again. My overall sentiment is that we stay in here for the entire year. All right. Entire year until the end of 2023, and that we find an extreme level in 2024. I just hope you're ready for it. I hope you're getting the right coaching. Try not to listen to too much noise. And again, if you guys are interested in checking us out at Simpler Trading, just go to simplertrading.com. Look me up. I'm one of the traders there, and you guys can join and hang out with us in a trial or something like that. I can't wait to see you again. Happy holidays, and we'll see you in the morning to the Simpler members. We'll see you 30 minutes before the open, and I can't wait to trade with you. Have a great day.